Claire, would you like to kick it off and tell us what your research is about that we'll be talking about today?
So yes, of course, with pleasure. So what we know is that women tend to participate less in stock markets, and when they do so, they participate to a lower extent. And so there might be several explanations. So women might be more risk-averse, or maybe it's self-stereotyping. So women assess themselves are not good at making financing decisions and participating to stock markets. Or maybe women are facing risks that even with the best possible variables we cannot control exactly for, or taking risk in other dimensions that we don't observe. And so what I do in my research is that I try to think how we can make women, or more generally people that are reluctant to take financial risk, participate more in stock market. And so can we offer some type of securities that make people participate more to stock market? And so we look at one specific security design, which are products that are offering a capital guarantee. So these products are offering a participation to stock markets and a capital protection. And so these products, they represent up to $3 trillion of assets under management in the world. And a good example in Canada would be the market-linked guaranteed certificates. And so what we do is that we look at one specific country, Sweden, where these products have been introduced. And so if you're wondering why we look at Sweden, it's because in Sweden we have like wonderful data. So for each individual, we observe a lot of information. So we have their exact portfolio composition, and we have like their age, family composition, income, and even information on their IQ. And so we observe the exact portfolio composition of all Swedish households, and we can see what is the effect on women and people that are more reluctant to participate in financial markets of the introduction of these products with a capital protection. And so what we observe is that once banks start offering these products, women and people that are more reluctant to take risk are more likely to participate and participate more in stock markets. And so this is the empirical part of my research, and then I do some theory to try to understand why is it the case and what kind of utility function, as we say in economics, can explain this type of behavior. And so what we find out is that it's even more the case for individuals that are really badly affected by losses.